we request all the paper presenters for this session to occupy their seats on the dais.
Good afternoon to all the dignitaries on the dais and off the dais and my dear friends. I am Pranshul Shah
And I am Ayush Thakkar.
and we welcome you all to the second technical session of this two-day CA Students Conference on In Futuro, Beyond the Horizons of Today.
Fintech is a combination of finance and technology. Technology has been a great source of structural change. This pace of change, propelled by a confluence of regulatory, capital, and business model factors, is remarkable.
You know what? Fintech is changing the face of the stock market too. The Fintech phenomenon has largely been a story of the last decade, making it one of the newest spheres for technological leaps in the world.
We are witnessing the creative shift of financial services rearranging itself around the consumer. The one who does this in the most relevant and exciting way using data and digital wins.
India has become one of the biggest markets in Asia for cryptocurrencies. Presently, the market for cryptocurrency and blockchain technology are gaining great popularity due to the advent of Fintech.
So without any further ado, let's proceed with this technical session on Fintech. The vastness of this topic has only piqued our curiosity regarding it. So to guide us through this session, we have with us very eminent CA Anand Jangid as the chairman of the session. Also adding glory to their days are CA Dhruvik Parikh, treasurer, Vadodara branch of WIRC of ICAI, CA Ketan Samdani, chairperson, Vikasa Anand, and Ms. Mitali Virwani, secretary, Vikasa Vadodara. The paper presenters for this session are Ms. Nupur Vasani, Mr. Aditya Bajaj, and Ms. Pooja Jain.
May I now request CA Dhruvik Parikh for his opening remarks.
Good afternoon, everyone. Respected dignitaries, Chairman of the session, C. Anand Jangid sir, our paper presenters, Nupur, Aditya, Pooja, and dear all students. Every business utilizes Fintech to manage their financial processes using specialized softwares and algorithms. But how are we as chartered accountants and future chartered accountants affected by it? The back-end operations of established financial institutions as well as other sectors of the economy like banking, investment institutions and even education sector utilize it. And we closely work with these sectors. With the onset of trading using technology, many markets other than stock market are open for business. Especially speaking about crypto market, the dynamic situation we are in it is all because of Fintech. Today's topic revolves around modern day trading, crypto market and blockchain technology, and I am genuinely excited about it. Without taking much of your time, I'll ask the very talented paper presenters to start their pitch and wishing you all a very happy learning.
Thank you, sir. I would now like to request CA Ketan Samdani for his address.
Thank you, MOC. Thank dignitaries on the dais and dear student. Good afternoon to all. Thanking organizers, SSEB of ICI and host Vadodara branch of Picasa and ICI. Not to forget the efforts of students and all those who directly indirectly put efforts for the success of this national conference. The conference is aptly themed as In Futuro to prepare our future chartered accountants to be future ready. Wish you all a very happy learning. Over to MOC.
Thank you, sir.
We would now like to take the honor of introducing the chairman of the session. A passionate evangelist for tech-based disruption in audit and finance domain, Sir is professionally a chartered accountant and certified information system auditor. His areas of specialization are forex audit, DP audits, anti-money laundering, Basel II, BCP, and operational risk. Sir was also involved in the development of regulatory compliance framework for various compliances like Sarbanes-Oxley Act and was part of the team developing solution for Basel II Accord implementation. He has also been involved in ERM implementation and IT audit for many international projects at USA, UK, Japan, China, etc. Sir is also visiting faculty at IIM Bangalore for information system audit and fraud analytics. Moreover, he has also been speaker at various national and international forums. With these words, we welcome C. Anand Jange.
May I now request C. Dhruvik Parikh to welcome the chairman of the session, C. Anand Jangid, with a memento and plantable seed pens. Thank you, sir.
We now welcome our talented paper presenters who have put in a lot of efforts and hard work to present very interesting papers for this insightful session.
We have Ms. Nupur Vasani from Vadodara presenting her paper on Future of Crypto in India. To provide us insights on trading and technology, future of Indian capital market, we have Mr. Aditya Bajaj from Bengaluru. And we have Ms. Pooja Jain from Chennai expressing her views on blockchain, revolution in Fintech.
We now request C. Anand Jange to take charge of the session.
Okay, so very good afternoon, everyone, and it's an amazing feeling to be here. I know I am between you and your lunch right now, and I'm in Vadodara, where I'm a foodie. You can see from my size, right? So excuse me for that. I know all of you are like you're cursing me, and maybe all of us here. That was lunch hona tha abhi, and we are having this. So, but don't worry, I have gone through the presentations and what are the thought process. I was talking to a paper. It's going to be very interesting. To quote something, you remember what Steve Jobs used to say, right? Stay hungry, stay foolish. So something, don't go that literal meaning, but for some time, stay hungry and stay foolish. So I'll not take much time. I have to give an opening remark. And I did have a presentation, but I thought I'll just squeeze it, all of that thing. And one of the reasons, guys, all of you sitting here, it's very important to hear the paper presented today on the topics. I speak at many forums and I'm a faculty at IIM and other places also, but I never refuse for a student conference because I still remember I attended one of the conference in Chennai in something around 1999 when I was a CA student. I was a foundation student. And as literally I come from a small town from Assam, so I'm not like much knowing what is happening around it. And somehow I moved to Bangalore to do my CA. And there was a first, anyone, how many of you are like foundation or CPT students? Just raise your hand, okay? So all of you know, right? After you pass foundation CPT, you think like CA is like very easy examination, you are a rock star, because sab pass hote hai usme. And it happened with me. So I cleared my foundation first attempt and then I flunked 5 times in my inter. That is a different thing. But it happens to all of us that we think, oh my God, this is like an easy go. So I thought, okay, let me go and attend a conference and now I'm a rock star. And when I went there, it opened up, your mind, a lot of things, because for the first time there I heard someone speak about IS audit. I never know what is information systems audit. I'm talking about year 1999. You guys are very smart. I was sitting there and listening to the speaker, the paper presented before in the last session. Amazing, the kind of knowledge they were talking about. Some of the points I was not aware of. So it's interesting. And that's why all of you, I would say that when I give my closing remarks, I want to ask you, what did you take it from that session? Fintech, guys, and the transformation is happening out here. And just to make sure that you pay attention to my paper presenters who are going to be there in our session, I want to just give you a few input, or what we call it the check-in for this session. The check-in for this session and why it's so important is there is a big change coming in the way our community of professional accountants are there. And to add value on this domain, it becomes important, the theme of the session itself, into the future. If you are still thinking only about the past and the present, you are missing out on a lot of things. You guys are the future of the profession. You guys are going to be the chartered accountants of the future. Now, don't you think it becomes very important that you have the right skills and the right opportunity in front of you? Debit what comes in, credit what goes out, we all know that. There's a fundamental, right? We have been, learning that from a long time. But is there a possibility beyond taxation, beyond accounting, beyond, finance and accounts? Can you think of that? I was listening to one of the very interesting talk at WARC by, how many of you know Mr. Sanjeev Mehta? Heard about this gentleman? Anyone? No? That's surprising. Sanjeev Mehta is CEO and MD for Unilever India and Southeast Asia. And he's a chartered accountant, guys. Surprising, right? Unilever is the biggest juggernaut of marketing in this country. And it's headed by a chartered accountant. And surprise, you guys don't know about that. Don't you think so? There are guys who are doing. So think yourself not as, I always call this as people who are just the number crunchers. You require to think strategically. There are a lot of things which are opening. And just to make my point, I'll just take 2 minutes before, I hope you're not very hungry, right? I know you are, but you just say. So I'll just take 2 minutes to put one point, and then I will explain in my concluding remark of why this is important. Guys, I'm sure all of you, most of you, how many of you are like first generation chartered accountant? You're the first guy in your family who's doing CA. Raise your hand. Oh my God, big number. Now, first generation chartered accountant are very different species of animal. Okay. I am also first generation chartered accountant, and first generation chartered accountant are those guys who will do anything to pass the examination. And I told you, right? When I actually enrolled for CA, the only time I used to go to temple was on my birthday, when my mother used to take it for the puja. By the time I came to CA final, I used to walk all the way to Tirupati, and I used to shave my head regularly every 6 months. Abhi tak baal wapas nahi aaye. If you go to Tirupati so often, you don't get your hair back, right? I offered it to Lord Venkateshwara. And it's always a kind of a feeling. You will also get it. One of the feeling would be that your kids should also do CA. You know why? Simply why? Because why should only you suffer? And I have a daughter who's in class 10th now, and she's getting into 11th. So I'm like, okay, boss, be ready for doing CA. And when I was doing this, I stumbled upon this very interesting report, and I will highly recommend you to go through this. It's like Future of Job Reports by World Economic Forum, and I want all students to read it up. I would say, see, for me and all the people on the dais, we are already CA, we are already like I don't know what, Sanjeev Bhai is 55, Sanjeev Bhai? 60. So Sanjeev Bhai and I am around 42, so I don't bother too much, we will survive somehow. But I don't want you guys to have a midlife crisis after 10, 15 years, when you suddenly see, "Arey boss, who moved my cheese?" You have read the book, right? Who moved my cheese? You don't want to have that. Now, this World Economic Forum, when I was going through the list, they had one very interesting section. You can just maybe at the break go through it. It says the top 20 jobs decreasing demand. Worldwide, not India. This is worldwide. Can you see number 3 and 4? And what is number 11? Financial analyst. All the domain which we are talking about is actually going away. And I'm not telling this, guys, this World Economic Forum, this extract is from the World Economic Forum report. See on the left-hand side, what are the emerging area? You want to go to the sunrise sector or the sunset sector? Sunrise, right? You guys have, you guys are future, guys. I would be very happy when I see all of you like successful doing something amazing, and we'll be proudly say, oh, this guy is a CA. And that's the kind of thing which you need to, think about. And that's something which our paper presenters are going to talk about. So without much ado, I will actually call upon first Nupur to, present her point, and then the other paper presenter, but just, listen to them, make notes, and then I will summarize. Nupur, over.
Hello everybody, good evening, good afternoon rather. I know all of you are hungry, but I shall today be presenting a very interesting topic today. First of all, I feel so honored to welcome Anand sir here. Thank you sir for joining in, and thank you to everybody who has been present here. And who has been patient enough to listening us at this odd hour. Myself, Nupur Vasani, currently pursuing my CA final, and today we shall be talking about a very interesting topic, which is crypto, the digital currency, and its future in India. And I already have sparked in many of you's eyes that, oh, we know crypto. I mean, why not? Because today every alternate person you meet is a crypto investor. Everybody knows about crypto because that's the latest trend, right? So yes, today we shall be talking about crypto. Now, crypto is something that everybody knows of. But I believe that before starting anything, let's all brush up some of our basics. So first, we shall be talking about So first, we shall be talking about what is crypto. Let's just brush it up. What do you mean by crypto? Now, crypto, a word or emotion, or rather I would say a form of investments which has been ruling out lately for its very good returns. So crypto is basically a form of payment that we use, which has been made using the encryption algorithm, which basically means that your data is converted into a code language in order to secure it. And so, in simple terms, if I put cryptocurrency is a digital currency or a virtual currency which has been made using the encryption algorithm, that is cryptography, to secure your transactions, as well as it is an alternative of investments in modern times. Now, there has been a common understanding with the word crypto, good returns. Even I said myself a few seconds back. Whenever you ask anybody what do you mean by crypto, they simply say good returns, right? But have anybody of us ever thought until when are we going to enjoy these good returns? Until how long we are going to get benefits of good returns? Well, that's the actual topic, the future of cryptocurrency in India. Before going into what is the future of crypto, let me tell you a brief history or timeline about how crypto came into India. So, in 2008, crypto emerged into the world. For decades, investments have always been associated with the word gold, stocks, real estate, etc. But from the past few years, we have also been introduced to a word called cryptocurrency. So, in 2008, under an anonymous group called Satoshi Nakamoto, crypto emerged. They introduced us to bitcoins, and crypto recorded its first ever commercial transaction in 2010. And you will be surprised to know that that transaction was to buy a pizza. Yes, crypto and bitcoins in 2010 were used to buy pizzas, which is very interesting. So yeah, that's how crypto came into effect. But even after that, for a longer period of time, crypto was not considered to be an investment class of asset. And there was a lot of uncertainty prevailing about it during the period of 2013 to 18 in India. And also, our RBI was in opinion to ban cryptocurrency in India, which actually happened. In 2018, RBI banned crypto from India. But as it is said that crypto still made its way, crypto came into the world, crypto had its own benefits. And so, Indian government also recognized its benefits, and in March 2020, Supreme Court struck down the ban from crypto. That's when officially crypto entered into India. Now, since crypto entered, for crypto the last 18 to 24 months have been a major transformation. The growth of crypto has been faster than ever, yet the future has never been so unclear. Contradictory, right? So yes, that is crypto. Talking about crypto in India, crypto since came into India, it has been growing tremendously. And one of the major factors that is attributable for crypto's growth is the adoption of internet. Indian government adapting internet worldwide is one of the major factors. India is home to a large number of crypto owners. And let me also tell you, it is believed that around 2030, this number is going to increase 30 times. Today, India is one of the leading countries which gives a large number of cryptocurrency transactions. Now, we shall be talking about or having a look at government's role. We have talked about how crypto entered into India, what is crypto. But have we ever thought what has government done to regularize crypto? Because let me tell you, crypto is still not a well-established currency in India. There has been many uncertainties, like whether crypto is a currency, whether to count it as an investment asset, etc., etc. And so, in India, the government has been following a very cautious approach while regulating crypto. RBI issued various warnings against how cryptocurrency is unsafe. At the same time, government also imposed a 30% tax on the virtual asset. But which also paves a high path of recognition of crypto in India. So with government imposing tax, we are hopeful that government soon shall be recognizing crypto. Further, if I talk about government, in recent speech of our budget of Finance Minister Nirmala Sitharaman, if you might have heard, you would have known that she introduced that India is soon going to come up with its own digital rupee. Also at the same time, India is going to join hands with a handful of nations to introduce its own blockchain technology, which is quite massive. Blockchain technology of India is a very big step in this field. So there are hopes that crypto soon will be having a recognized place into India. Also, further being asked about crypto, she said that today's youth has seen a possibility and a future of crypto. And so she also sees a possibility of revenue in it. Some typical Indian government things. So yeah, that is about it, how crypto came into India. Now, crypto is still not yet regularized, but crypto is very popular. So how shall we conclude that what crypto's future exactly is? Because crypto is quite volatile, both in terms of its price and consumers. You don't know what turn it takes and when it takes. So we shall analyze some pros and cons of crypto at the current stage, which might give us a hint of whether it is here to stay or it is just some short-lived happiness. Let's start with some benefits of crypto. The very first one talking about immediate settlement. Now, modern generation is a generation which has a need to get their money credited into their accounts within minutes and seconds. They are not even ready to wait for days. So, crypto is one of those modes which helps you easy money transfer, faster money transfers. Now, if talking about Indian banking system, Indian banking system do provide you transactions within minutes and seconds. But let me tell you, along with those transactions comes trading fees, finance cost, transaction fees, etc., which at times are very high. And so, crypto being a savior to it, all the money transfers happen at a faster pace as well as at a lot of cheaper cost. Next, now as I said, one of the major factors why crypto is into India is internet. Internet is something that is accessed all around the world, and so is one of the advantages of crypto. I mean, you just need to have a mobile phone, a stable internet connection and some money to get your cryptocurrencies. And so crypto is something that can be accessed by anyone, anywhere around the world. Also, let me tell you, many industries are taking cryptocurrencies as their mainstream currencies. Like for example, if you go, fintech companies like PayPal and Square Payment, they are considering to accept cryptocurrencies as their currencies. They are accepting transactions in cryptocurrencies. And also the very famous Tesla is going back and forth in accepting Bitcoin payments for any purchase that you make. So yeah, that's how crypto is excelling in the world like anything. And last one, the name itself, cryptocurrency, which signifies cryptography. Cryptography in itself means it includes some complex codings which help you secure your transactions and data. And cryptocurrency is something that is very famous among youth these days because they consider it a very easy form of alternatives, form of investments these days. Also, if we further look into it, cryptocurrency is something that majority of us know, but all these benefits make it look very good. But there are also some limitations which crypto has, which might be not seen or which might not come as transparent as the advantages comes. So let's have a quick look into what the limitations are. Going on to limitations. One of the major setbacks that crypto in recent times has faced is it being unregulated. Though government has imposed a 30% tax, but we still cannot say that government has completely regulated crypto because there is nothing specific that government has ever said about crypto. So being unregulated is one of the major setbacks that crypto faces. Another limitation is that it is a saying that anyone's digital fortune can be crashed within seconds by a computer crash, or it can also be crashed with a hacker. So yeah, even though we say that it is an encryption algorithm, but there is always a theft of hacking being done. And so your information, your transactions, your currencies are always at stake. Another thing that crypto in order to become a mainstream currency or an investment alternative needs to manage and needs to fulfill a lot of divergent criteria. One of them is it being mathematically complex for the hackers as well as it being user-friendly. So a user-friendly interface is very important. We do have a user-friendly interface, but at the same time, the safety, the security is not at that level, it needs to be. So being user-friendly at the same time, it being safer for its user is one of the limitations we can take into consideration. And the last one is traditional approach of accounting process. Now, cryptocurrency has challenged our traditional accounting process. Like, how do you know, is it a currency, is it an asset? How shall you identify or how shall you treat a transaction of a cryptocurrency? How shall you treat a crypto asset? How shall you treat a crypto investment? What are you going to show in your books? So this is another major limitation that comes across that crypto has raised in front of us is the traditional accounting method, because there might be a need, we need to change our processes of accounting the same. Now, if research is to believe, if statistics are to believed, when a survey has been conducted, 95.20% of population believe that crypto is here to stay, whereas only 4% believe that it shall not see a future. If I talk about Bitcoin's success and its future depends upon how currently it deals with all its limitations. So crypto is something that is still in a lot of uncertainty. It continues to garner both the good and the bad press, but here the debate still doesn't end. Everybody has their own opinions. There are several analysts which believe that crypto is here to stay. They believe that crypto may get stable once it is regularized by the government. But also at the same time, investors believe that regulations can impact negatively on crypto, because many times regulation makes things difficult for you. So I guess it is a bit early to say that whether crypto is here to stay or it is not. But what we can do is we can still look at its positive aspects. We can hope that it is here to stay, and we might keep continuing our researches. We might keep continuing building a market for us, so that in future, if crypto is here to stay, we can take its ultimate benefits. And one thing for is it's sure that market after 5 years would be as unrecognizable today as it was 5 years ago. So yeah, that's from my side. Thank you so much for patiently hearing to it. I'm thankful.
Thank you, Nicole. It was a nice one. So I think we'll go directly to the next speaker. So may I call upon Aditya? So by the time they're just setting up their machine, I think, have you seen today crypto? It has jumped 6%. Anyone investing? No? Okay.
Guys, are you all set? Thank you so much. ठीक है. So, शेयर मार्केट वो कुआं है जो पूरे देश के पैसे की प्यास बुझा सकता है. How many of you heard that dialogue somewhere? Able to recollect? Please speak up. लंच किया है guys अभी 1 hour पहले. Which series? Thank you so much. Thank you so much. चलो. Okay. So. Hello everyone, I am Aditya Bajaj from Bangalore and I am honored to be here today as the student speaker for the topic Trading and Technology Future of the Indian Capital Markets. Our journey in the next 10 minutes shall revolve around the future that beholds our capital markets. So, let's first begin by understanding what exactly is a capital market. So see, market is a place जहाँ पे buyer और seller का मिलन होता है. So similarly, capital market is a place where buyers and sellers, trade in financial securities, for example, stocks, debentures, bonds, etc. Basically, capital markets constitutes of mainly stock market and the bond market, and there is a further subdivision into primary market as well as secondary market. Primary market is where companies come to raise funds for the first time, like through the IPO route, and the secondary market is where people like us daily trade in the already listed securities. ठीक है. So, yeah. So, I personally believe that COVID-19 ने इंडिया को 2 अच्छी चीजें दी है. The first one being people have moved closer to their families, and second one, we all saw the historical bull run that our markets witnessed in the last 2 years. I mean, in 2020 and 2021. So, basically, उन 2 सालों में after coronavirus, the word stock market was the buzz amongst the common Indian, especially after people were financially motivated upon watching that world famous web series Scam 1992. Our markets, both the stock as well as bond market, saw an extensive inflow of investments through SIPs made by investors like us, right? And see, if you see the journey of our markets, it has been very transforming over the last 3 decades. Like they have moved from a complete paper-based system to a completely digitalized setup that has actually aided the investors and the markets. But the road that lies ahead for our markets will unveil a better future both for the markets as well as for the investors. So let's find out. See, it's imperative before we dive into the future, we need to understand that what were the things that used to happen in the past and why will these things which are going to happen in the future change the way or make the things better that used to happen in the past, right? Okay. So, yeah, settlement time. So during 1990s, the settlement time of our markets was T plus 14, which means if you buy a security today, you had 14 days to clear the payment, and post which you'll receive the physical security of the physical copy of the security. This was a cumbersome process, and like it involved a counterparty risk. A counterparty risk is where the party along with which you are dealing, he or she will fail to fulfill his contractual obligations. So, see, this long period of 14 days was a primary reason how Harshad Mehta was able to manipulate the funds into the stock markets. But over the last 3 decades, SEBI has actually reduced T plus 14 to T plus 2 with a completely digitalized setup that has not only reduced the counterparty defaults, but like almost have eliminated them, right? And in 2021, they introduced the concept of T plus 1. Wherein if the transaction will be executed by the next day itself. So basically SEBI was telling that this move has been taken to improve the liquidity flow in the market and to reduce the collateral and margin requirements of big ticket investors like the DIIs and the FIIs. So like to ensure that all of us are on the same page, DIIs mean domestic institutional investors, for example our LIC, mutual fund companies, insurance companies, and FIIs means foreign institutional investors. So these are basically similar type of companies but have originated from a foreign country. So this was a scheme that SEBI had introduced and NSE and BSE both opted for it, starting with 100 listed companies with the least market capitalization. And similarly, since the theme of the conference is in futuro, so future May many stock exchanges are actually looking forward to T plus 0 same day settlement scheme. Which means if you buy a stock or a bond today, it will reflect in your demat account the same day but post the market hours. But see, there are benefits of a shortened trade cycle, but they also bring with themselves a set of new challenges. Let's discuss them. First one, additional burden on the existing infrastructure of the banks and clearing houses. So since they'll have to, complete the transaction by the next day itself, they'll have to improve their efficiency as well as their system the ability to process more transactions. Second, remote clientele. Now, people in remotest part of the country, they still deal through their brokers to invest in the markets. So generally, they pay their brokers through checks, which generally take 2 days to clear. But since now the T plus 2 will become T plus 2 will become T plus 1, so brokers will have to maintain an additional working capital to pay in and pay out of the trade cycle. Then third is pre-funding for FIIs. So as I told you, FIIs वो investors होते हैं जो बाहर की countries में हैं and they are big companies. They invest in huge volumes. So whenever they invest, it has to be a collaboration between various organizations. For example, the exchange, their fund managers, banks, clearing houses, etc. So the investors in Europe and US they follow T plus 2 till now. But since India will be moving to T plus 1, so it will be a disadvantage. They'll be in a disadvantageous position because they'll have to book their foreign exchange 1 day before the transaction. This can make them vulnerable to more forex loss and actually make investing in India costlier for them. Taiwan had adopted a similar model, but due to the rapid withdrawal of FII funds from their country, they had to close T plus 1 scheme basically. I'm so sorry. Yeah, failed transactions. So see, if more transactions will be executed in a single day, it's highly likely that some of the other transactions will fail. And if due to lack of time, those uncorrected transactions remain uncorrected, the number will keep on increasing, eventually adding more burden to the existing infrastructure. Last is complete overhaul of the existing infrastructure of our clearing houses as well as banks. So see, many processes they are tuned to T plus 2 today. But if they wanna go ahead with T plus 1, they'll have to re-engineer their entire processes to make them in tune with T plus 1. Okay, so India को 1947 में Britishers से आज़ादी मिली, right? But our markets have still not become free from foreign investment. See, don't get me wrong, I'm not telling you we don't want any foreign investments in our country. But ideally, what should the case be is domestic participation should be more than the foreign participation, so that the country becomes, kind of self-reliant. But what's been happening is since many years now, foreign investors have been the dominant players in the market because their holdings is the second largest after the promoters of the company themselves. The need to increase the DII and retail participation in the country was felt long back. In fact, oh shit. So sorry. Yeah. So see, as you can see from this comic, what used to happen 5-6 years back was investors used to pour in money. Majority of that was taken up by the foreign investors, and portfolio appreciation for the retail investors, I guess, was like negligible. But these things have actually changed in the past 5-6 years because of the extensive investments that we people have been making in the markets, thanks to we becoming more financially educated. Yeah. So basically, my concern is if we have to make investing simpler for those people who have still not taken to the capital markets, we need to do something or make the use of an upcoming technology so that they are able to embrace the digital technology and start investing or trading in the markets. This can be done by using AI or machine learning. So, because of these technologies, the computing power of these systems have increased so much that they are able to predict the behavior of the markets more accurately based on the past history-based data. Yeah, so basically the thing is, for example, you can take algo trading for that matter. Algo trading is basically a software that is based on a predefined set of instructions put in by the user that generates high frequency trades at the best possible price, so that the trader's time and efforts are minimized, as well as at the same time he's able to generate the maximum profit of that particular trade. So I'll give you an example how that works. Okay, so there is a general parlance in the marketing community that if the 50-day moving average of a stock crosses the 200-day moving average, it mostly is a buy signal for the stock. So if you put that instruction in the software, what the software will do, it will monitor all the stocks that the user has selected, and as soon as the stock fulfills this criteria, that software will dynamically assess the market situation. What is the volume action, what is the price action, markets can actually markets go up or not, and basis all that, it will take a decision of whether to buy or not. And if all the criteria are fulfilled, it will buy the stock at the best price so as to ensure the maximum profits for the user. So if the thing is, algo trading ka awareness is not so much amongst the common user, because these softwares are generally on the a bit more expensive side. So if the brokerage houses, what they can do is they can provide access to the customers to these algo trading softwares, even for a subscription fee, and educate them as to how to make use of these algo trading softwares and use their prediction analytics or prediction tools to trade or invest in the market. This will ensure that the retail participation in the market increases to a certain extent that in the long run our dependency upon the foreign investment will reduce. Blockchain. So see, blockchain, we all know it has its applications in various areas of finance. For example, insurance, banks, fintech, or mutual funds, etc. So similarly, blockchain also has its applications in the stock market. It will have its application in the stock market because whatever points I have mentioned over here, these points are just basis the benefits that blockchain as a technology has provided to the cryptocurrencies. Because no exchange apart from the Tokyo Stock Exchange has actually started pilot testing of blockchain technology on their markets. So first one will be automating post-trade events. Post-trade events are those events which basically take place once the trade has been executed. For example, reporting, clearing, settlement, etc. So blockchain, what it can do, it can automate all that process by reducing the paperwork required for the transfer of the legal ownership of that asset, and it can also reduce the market intermediaries required to be there in that transaction, thereby reducing the counterparty defaults. Blockchain, we all know it's an automated network as well as a decentralized network, right? So because of that, what will happen is it will be able to execute the transactions in minutes, not in days. So this will reduce the commission cost to be borne by the ultimate consumers by a large extent. And any exchange which is backed by the blockchain technology can easily flag and report any illegitimate transfer attempt made by anyone on that blockchain network. But The point is blockchain, as I told you, no exchange apart from Tokyo Stock Exchange has actually started the testing of this technology. So regulators are currently uncertain up to the extent to which blockchain can actually be implemented in the markets. That's because of the decentralized network, the security standards have to be maintained on a decentralized network on a user-to-user basis. So that's a very difficult task. And also they'll need to check basically the resiliency of blockchain system as to whether the advantages which it claims to provide to the markets, can it actually provide that or not. So these things, once they are sorted, I'm pretty sure in the next 10 years, we can see more exchanges adopting the blockchain technology in their own exchanges. Yeah. So, see, we all know over the last few years, these new age fintech companies have the major driving forces to draw the attention of common user to the markets. That's purely because of the simple UI UX design, where आप एक बटन पे है ना हर चीज कर सकते हो. It's like it's so simple. So people actually feel motivated to use that app and invest in the markets. Like basically these fintech companies have integrated various tech solutions in their services, which has brought the access to the capital markets to the remotest part of a country. Even banks, for that matter, they are now partnering with these fintech companies to leverage their state-of-the-art technology. Because see, when banks and fintech companies partner with each other, they get two very powerful advantages. Banks get an access to the extremely technologically advanced fintech companies so that they are able to provide their users with a seamless digital experience. Whereas fintech companies get an access to an established customer base with the bank. And they also get a stamp of trust. If a company is associated with a reputed bank, people automatically start trusting it, right? So, see, the point is, fintech companies ke liye, the acquisition cost per customer is very, very high. So, only way these companies can become sustainable is by driving higher volumes through their apps. And how they can do this? By actually, incentivizing the user to, probably, as I told you, either they provide the access to those algo trading softwares, or incentivizing them as to providing some rewards or something, that they're actually doing it now. Even, or the all-in-one feature that these apps have, you can start an SIP or apply for an IPO, invest in the equities, access the bonds and commodities market through one single app. So that's making the life of these investors really, really simpler. Okay. So the next application of fintech companies is like they can provide real-time intelligence and real-time insights to various asset managers or institutional investors, so that they are able to effectively do asset allocation and rebalancing for their own investments. So how does this work is exactly they aim to automate the front-end processes of various institutional investors. For example, performance management or monitoring and rebalancing their portfolio, etc. But the catch is that we all know what RBI has been a regular watchdog over these fintech companies, because first point is they are a loss-making entity. They are completely dependent upon funds inflow from investors. They have not become profitable yet, so they can't trust these companies with money of the regular people, right? Okay. So we all saw that RBI has actually banned the use of not banned but restricted the use of buy now pay later cards. That's because they need these fintech companies to regulate themselves more, so that they're able to manage the funds of these of the regular users effectively. Okay. So as we all know, in 2022, FIIs have almost withdrawn like $22 billion from the Indian markets. And because of this Russia-Ukraine war, oil prices, etc., our markets have been like going haywire. But still they are very stable. Why? Because people like us have increased their SIP investments. In March 2022, the SIP investments hit an all-time record high of 12,300 crores. The people in the remotest part of country have embraced digital technology. And see, ultimately, because of the stiff competition which we are receiving from outside, Indian companies need to constantly evolve themselves and stay relevant and up to date to grow our Indian capital markets in the upcoming future. Thank you so much.
So great, Aditya. I think he gave a kind of a very good insight into that. May I request Pooja to present her paper, please.
horrific, violent, monstrous, horrific, violent, monstrous, stage full of fear. This is not what a revolution is. What is a revolution? What do all revolutions have in common? All revolutions, till date, are inspired by hope, idealism, and dreams for a better society. A society which does not have problems of today. When barter system had problems like lack of double coincidence of wants, money was the solution. For safety reasons and for facilitating financial services, we had banks. It was a revolution. And then, for convenience, came financial technology, or Fintech in short, which refers to technology-enabled financial solutions. The interlinkage between finance and technology may seem like something fairly recent, but it has evolved over distinct eras. Fintech 1.0 was all about infrastructure for rapid transmission of financial information. Fintech 2.0 was about the switch from analog to digital with online banking and e-commerce. And then there's yet another revolution. A revolution which lands us to Fintech 3.0. And that is blockchain technology. Good evening, I'm Pooja and my topic for today is blockchain, revolution in Fintech. First, let's learn to spell this word. How do you spell this? Blockchain, right. And what is more important is that it's not spelled like B-I-T-C-O-I-N. Blockchain is not same as Bitcoin or any other cryptocurrency. So what is blockchain? What problems did it solve? Why it is a revolution? For that, let us know the current system and its problems. Today, whatever transaction happens has to go through an intermediary like banks, a third trusted party. For example, you buy a laptop. The transaction has to go through a payment gateway, a payment processor, and a card network. It's checked with your bank if the transaction can be authenticated. If it's a yes, the confirmation goes to the seller through the same channel, and then the product is dispatched. All these transactions are generated, the ledgers for all these transactions are generated once the bank verifies it, and it is stored in one centralized server. Now, this system has some problems. One, huge service charge for each intermediary. Two, certain transactions take a lot of time. Three, a lot of intermediaries equals less privacy. Fourth, hacking is easier because all the transactions are stored in one centralized server. Now the solution is blockchain. Let us see what it is. A group of users who wish to participate in the system form a network. If you want to join the network, you have to create an account with it, and you will be given a public key and a private key. Public key is what you give to everybody, and private key is something personal to you. Now, the public key is derived from the private key. And the interesting thing here is you cannot find the public key with the private key with the public key. It is a one-way algorithm. Now, say you are A and you wish to join the network and do a transaction with B. Now, you write a message that you want to transfer 5,000 units of a currency from your public key to B's public key. So yeah, now you hash this output using a hashing algorithm, and then you have to encrypt this and take your digital signature. For that, you enter your private key. And now the output is the encrypted data or your digital signature. Now you are going to transmit the message and the digital signature to the network. Other users in the network who want to carry out digital events also do so. Now, a group of transactions, including that of yours, is bundled into a Merkle tree. Every transaction is hashed and it is hashed upwards continuously until you derive a single Merkle root. Now this Merkle root is put with other components of the block like the time, version and previous hash, that is the hash of the block before this block, and then a nonce and a target. Nonce is arbitrary, you have to find it, and target is automatically generated by the network. Now there are some special nodes called miners. Actually in cryptocurrency it's called miners, but the way blockchain is applied to each sector, the name differs, but in this presentation I choose to stick with miner. Now the miner validates the transactions and put it into the ledger. So there are two steps for it. The first step is validating the transactions. The miner should actually check that the digital asset transferred actually belongs to the sender. That is easy since the ledger is open source, anybody can access it. And then he takes your message, he hashes it, and then he takes your digital signature, he enters your public key. Public key is known to everyone. He enters your public key, and then he'll get a decrypted output. And you can see here the hashed output and the decrypted output is same. So what it signifies is that your transaction is legit. I mean, it's not tampered in the transmission channel. So after he does this for every transaction in the block, the hashed output and the decrypted output, if they are same, it means that the transaction was carried out only by the person who has to do it. That is the person with the private key. And then the task 2 is to find a key to lock the block with the previous block. So the miner arranges all the components in a string with some place in the end for the nonce. So he has to pass this string through a function, and then the output he gets should be lesser than the target. So let me try it. With nonce as 0, the output is greater than the target. 1, no. 2, no. So let's keep trying. So in trial and error method, we get 739 as nonce. The output is lesser than the target. Now you may have a question. If you are given a function like g of x is equal to y is equal to x minus 2, what would we do? We find the inverse of g and then easily find out the value of x. But why are we not doing it here? Because the hash function cannot be inverse, like hash function does not have an inverse. So the trial and error method comes to resort, and it is the only way out. So when one miner finds the solution, he broadcasts it to the network and the other miners verify it. And when they verify it, the block is linked to the previous block, and once it is linked, it's immutable, you cannot change anything. You can see here that the hash code of the previous hash code of the block XX2 and the current hash code of the block XX1 is same. So another group of transactions appear, the key is found, it's broadcasted, verified, and again it's linked to the previous block, and a blockchain is formed this way. So what is the solution provided? Like we saw 4 problems, and now we're going to see the solution. 1, no big intermediaries, so less service fee. 2, the transactions are settled on a real time, like even foreign transactions are settled on real time. 3, no one can find you, like no one can find that you are the person behind that public key. So it's private unless you wish to disclose it. But if you ask me that will it create some problems like compliance issues, then the government will ask for KYC, like when you enroll with an exchange. But even if it's not so, like you can the officers can trace you, but it's to an extent private. And 4, hacking is harder. Why? Because if if a hacker edits a data in one block, say he's editing it in the fourth block, so it breaks the block, and then it not only breaks that block, it breaks the blocks following it. So he has to mine every block after it. So mining one block, he has to guess around millions of possibilities. So mining every block after it is not an easy task. And not only that, he has to do it in minimum 50% of the nodes. So like for mining one block, they take 10 years. So mining a lot of blocks in 50% of the node will cost him more than the benefit he gets from it. And if he does it for non-monetary purposes, even then he has to do all this before another person mines a block. So this is basically the hacker versus the whole system, and there is very less chances of hacker getting the better of the system. So what's the application? Number one, cryptocurrencies like Bitcoin and Ethereum use blockchain. So it gives a lot of options like secure, like initial exchange offering, crypto lending, etc. And smart contracts. That is the contracts that are created and executed by coding on the blockchain. Like it need not require an intermediary to facilitate the contract. And then it provides a single source of truth, so no manipulation, no tampering of data. And it stores confidential data, like you need not depend on a private server for it. It stores confidential data everywhere, but no one can tamper it. And it helps in building P2P service networks like P2P in insurance, P2P banks, etc. And there's a question that if all the transactions are captured on an immutable blockchain, then what is left for an auditor to audit? Well, there is. Audit profession is not doomed. The transactions recorded on the blockchain may still be unauthorized, illegal, linked to a side contract which is off-chain or incorrectly classified in financial statements. So, audit profession is not doomed. Auditors still has to evaluate the management's accounting policies on digital assets and liabilities, and the auditor should still perform auditing procedures on the estimates and stuff. So, in addition to that, the audit profession has the following opportunities. One, being the auditor of smart contracts. Two, providing assurance for blockchain related applications. And three is arbitration for blockchain related smart contracts. And then there's still unknowns regarding how this blockchain will affect the auditing profession and the speed with which it will do so. So you can see that the application of blockchain is keep on increasing. The world is adapting it. So we as future professionals should keep monitoring the developments in blockchain because it provides an opportunity to learn and capitalize on the needs of changing business environment. So remember one thing, to be successful you have to hone the art of life, and the art of life is constant adaptation to surroundings. Thank you.
Thank you, Pooja. Thank you. So friends, I think you all heard all the three paper presenters. I think you should give a round of applause to them. It's a very tough topic. And let me summarize the points. I was just thinking, what should I be talking about? Let me start with, Nupur has a very interesting point on crypto. See, cryptocurrency, there are a lot of challenges and other things which she rightly pointed out, but it's also something which is still there. See, since 2008, even today people are start searching for who's Satoshi Nakamoto. No one knows who that guy is. And that is exactly the challenge which we all are facing. Now, in this given situation, it's become important that we have a good understanding in terms of what crypto is. Because crypto taxation, even today only there is on virtual digital asset, there is a kind of a guidance note which has been issued by our institute. And who better than us to basically talk about this? Because if anything is to do with money, numbers. We are the people. So we need to upgrade ourselves and learn about that. Our second speaker, we had Abhishek. He was talking about all on the, the new things which are happening. And I have a slide, if I can just project it to this one. I used to work at Goldman Sachs, and that time whenever we used to go to US, we wanted to see if any of our friend was in UBS. UBS, if you're aware of that company which was there, they had a biggest trading floor in US. Okay? Excuse me. Can I put this slide on the thing? No, I want the slides to be on the screen. Yeah. So what happened was UBS trading floor used to be the biggest one in 2005. The reason was you required traders to do big trades. But after algo, which came, algorithmic trading, I remember I was in Goldman Sachs, we used to audit the algorithmic trading platform. We used to use the algorithm called VWAP's algorithm, which was the algorithm to do. Like, how many of you remember A plus B whole square is how much? B square plus 2AB. Have you ever used it in your life? So you use it in algorithms. Okay, and that's the interesting thing. Now, that is exactly where this changes which are happening. If you see, I use a platform called Zerodha for my trading purpose. I'm sure many of you would have tried it out. Now, I'm not promoting it, but I remember in 2008-9, that was the time, Goldman Sachs used to spend around $500,000 to make a crypto, algorithm. Today on Zerodha, you can get algorithmic trading for 30 rupees per day. Can you imagine that cost which has gone down? So everyone has power. If you know, there is a kind of a certification called CFA. Have you heard about that? Most of the guys, how many of you know that they have added a 100 marks paper on AI, artificial intelligence, in that? Which basically means you should know Python and all the things. Okay, no, not this one. I was trying to show you this because this is a very good picture on transformation. This was the UBS trading floor in 2005. And just see what happened in 2016. Today it is closed. They don't require this kind of numbers of people. So people have to understand that things are changing very fast. So I'm sure the paper presenter did a great job showing what is changing. And coming to the last point, blockchain, that's something is really interesting. So today we call blockchain as aloe vera for financial services. Aloe vera is used for everything, right? From skin to your anything you will say, aloe vera has to be used. Now, if you go and check out Harvard Business Reviews, this is 2018 edition. This was the March edition. There is a kind of a article by Joe Ito and there is a lady called Narula and three people who wrote the article. They said blockchain will do to financial services what internet did to media. Like, I have disconnected all my connections and I consume media using my Amazon Prime account and my Netflix account, right? Many of you would have changed it to that. Now that's something which has happened because of internet. Now exactly that is something which is going to happen with blockchain. And blockchain, why should we know about that? There is a fundamental reason. What is the biggest problem with double entry system of bookkeeping? Anyone knows that? Fundamental problem with double entry system of bookkeeping. The fundamental problem is, when we write in examination, we write in the books of X, this is the entry, in the books of Y, this is the entry. But in real life, do you do that? There are two different people passing the entry, and then what happens? You have to do reconciliation. Reconciliation is a pain. Anyone has done retail audit would agree to what I'm saying. Now, imagine the reason why it happened is, if you have your client, have you ever noticed that they will only say one thing? My books of accounts are correct. Mera khata sahi hai. Dusre ko jao. Now, there is no single source of truth. So as Pooja was rightly saying, there is a single source of truth and there is a problem for that. Blockchain is a tamper-proof ledger. If you are a chartered accountant and I ask you, reimagine ledger, this is the best ledger which is there because it cannot be tampered with. Impossible to tamper with. If you tamper it, I'll come to know. So they are trying to say that let's have a triple entry system of bookkeeping. One entry in your books of account, one entry in my books of account, and third entry on the blockchain, which basically help us all to have a single source of truth. Now that exactly is what we should be doing it. And friends, it's changing very fast. Anything adoption, you can see telephone took 75 years to reach 100 million users. But I don't know how many of you play. I was searching for, Pokemons actually here in the lunch time. Anyone play Pokemon Go? No? So I have it on my mobile. I just keep playing it as fun. It actually reached 100 million consumer in less than, we can say, 1 month. That's a great thing. So all these things are changing around us. We are in the fourth industrial revolution, and I would highly recommend you to go to the site of World Economic Forum and understand, because we are the guys who are the people talking about this. So friends, without much ado, I would just say all the paper presenters did a great job in trying to give you an insight on that. After the session, talk to them, get more insight into this. You guys should go back. How many of you here are third year articles? Anyone? No one? Some of you? So don't you have that feeling like, I don't know, I think this is called third year syndrome. By the time you come in third year articleship, you start thinking you know more than your boss. Happens or not? It happens with everyone. I also used to think my boss is kuch nahi aata usko. मैं ही कर रहा हूँ, मैं ही चला रहा हूँ office को. So you should go back to your office, talk to your team members, tell them all these things. You guys have to basically have you seen the way how bees, if there are no honeybees, what will happen to all the flowers? You've learned that in your classes 7, 8, 9, right? We have to germinate this idea with across thing. So that's what I would request you to take back and think about all these things and work on that. Thank you guys.
Thank you, sir.
Friends, let us appreciate the paper writers for their hard work and efforts. I would request C. Anand Jangid to present mementos and certificates to the paper writers. Ms. Nupur Vasani, Mr. Aditya Bajaj, Ms. Pooja Jain, Thank you, sir, and best of luck to paper writers for the results, which will be declared in tomorrow's valedictory session.